All right, we are live. We're back. I am super excited today. My name is Sunny Ray. This is the Sunny Ray Show. Today I'm joined by Joseph Honorati. Joseph, how are you today?
Hey, Sunny. I'm great. Yeah, good to see you again.
Good to see you again as well. I don't even know where to go with this one. Joseph and we've known each other for what? I want to say 13 years. He doesn't remember when we first met because he was so
You
big,
did,
but
bro. That's the opposite of that. Sunny doesn't remember when we met. This is a joke. He's trolling me. We met in 2014, and I think you tried to pitch yourself to help out with CA Vertex, which was the first Bitcoin exchange in Canada where I was working at the time. I don't think you even remember that. And we met again in I think 2018 when I was at Kraken, and we got to spend a lot of time together. You're not going to forget that.
yep, that's for sure. Okay, so let's give people a sentence or two on Apex. Am I saying it right? Is it Apex or how do you like to
Apex
pronounce
or
it?
Apex, I'm good with. I
Apex.
like both.
Okay. So
Yeah,
I
it's
know
the
that's
the Apex stablecoin. That's the idea.
so do you want to give people like a sentence or two on what you're trying to build here and just how potentially ginormous it is?
Yeah, yeah, we're working on a couple of projects, but one of them that Sunny's asking about here is Apex, APYX dot FI, Apex dot FI. And it's a stablecoin product, an offshore stablecoin, the non-Genius Act stable, right? Not available to U.S. users. That is yield-bearing stable backed by variable rate perpetual preferred stock like MicroStrategy's Stretch STRC. So we expect in the kind of long term the staked or locked portion of Apex to yield around 13.5%, and it's a two token model. So there's a yield bearing token uh, that we hope or expect to yield about 13.5%, and a non yield bearing kind of payment stablecoin that we expect to be used as a collateral asset across DeFi that has, say, a bit more liquid profile. Um, yeah, that's the project.
Cool. Okay, so like I said, let's maybe come back to that in a little bit. I was curious to ask you a couple questions about your background. I know a little bit about it, but I think this is going to be fun to dig in. So, you grew up and studied at the West Virginia University, right? Not exactly a hotbed for crypto or finance. What drew you to economics, and what was driving you intellectually in those years?
Yeah, yeah. So I actually only did one semester at West Virginia, but it was a like a pre-doctoral program. But anyway, early on, I studied economics in my undergraduate program. Economics kind of throughout my education, and what got me into it in the first place was it goes back to before then. So I think there's probably two events. When I was, I don't know, like 11 or 12 years old, I was selling stuff at my school, like chewing gum and uh, trading my snacks and stuff, whatever. I remember one week I made $22 selling chewing gum at a 8-cent profit margin per pack, and my business got shut down at school, and I was kind of like the good kid, and I wanted the teachers to like me and whatever. And because and my business got shut down at the school, and they're just like, "Oh no, you can't do this. You're like, uh, this is like bad for everybody. You shouldn't be selling this stuff in school." I'm like, so anyway, I got kind of upset about that. I felt like I was doing something wrong, but in hindsight, I wasn't. And so that was kind of one that stuck with me, like, the man shut down the free market, right? And so we'll come back to that later. And then probably in my teens, I was 15 or 16, and I was playing this game named Ultima Online, which was a precursor to World of Warcraft. It's like a massively multiplayer game, and it has digital economy, right? So there's a currency in the game that the developers implemented as like this ought to be the currency, a digital currency. And I used to buy and sell stuff in the game as like my kind of business or like way that I enjoyed playing the game, and I'd sell like big ticket items, buy and sell big ticket items in the game, and uh, every day the prices on all these items would go up because the inflation was happening, but I didn't kind of understand it because I was a teenager and didn't know anything about economics. And prices are going up like 10% a day. At one point, there's like hyperinflation taking place in the game, and everybody was just kind of adopting to it. But then I remember some traders one day just switched which assets they were quoting their trades in to a much more stable asset, like an alternative currency. But it wasn't a currency. It was not what the developers had intended to be the currency in the game. So and we got really I guess I didn't really get excited about it. I didn't understand it. I was like, oh, that's weird. And then the next day, almost everybody was quoting in this new asset. So I was like, okay, all the big traders, right? So I was like, whatever, I'll start quoting in the new asset too. Seems like everybody's doing it. And reflecting on that, it's pretty crazy. Like nobody organized this. There wasn't like a forum post. It's like, hey guys, we're gonna switch currencies now. It was organic. It was bottoms up. And I didn't understand it, but it kind of intrigued me. It stuck with me. And then I ended up in university and I kind of fell into an economics class. And through the economics class, it kind of dawned on me like, oh, economics can actually explain what happened in this hyperinflation situation. And it also kind of said, you know, market, the implication, I guess, economists don't really take judgment stance, I guess, but there's probably better outcomes if markets are free, relating to the business that I was running when I was in elementary school or whatever, middle school, and those kind of two things together led me to focus on it. And I did some work when I was in university on monetary theory, and had a bit of a focus anyway, on digital economies. And this was back in, say, '05 to '08.
And,
And then,
oh, sorry,
yeah,
sorry, so
no,
continue.
I'm all good, Sonny. Go ahead.
No, I was gonna say then you did your master's focus on monetary theory. Is that correct? So,
Yeah,
is understanding how money actually works at a fundamental level is, I think, a lesson that maybe a lot of people could use. We're all chasing after it, but most people don't ever stand back and ask themselves, what is it? So, well, I guess my question is, like, what were the big questions that fascinated you at that time, and did you have any sense then that money itself was about to be disrupted, or did that come like way later?
no, I didn't have an idea that it was about to be disrupted, but of course there were kind of theories out there from various academics on what ought to be a good currency, like oh, maybe we ought to have like a durable good that's in a warehouse and we trade warehouse receipts, and this is like a way to have a sound monetary system. And I was into this like free banking, I guess, is kind of one perspective that I kind of subscribed to, and I was into uh, like the theory of sound money. It's like fiat's probably a problem, and there's kind of a bunch of issues that it brings about. So that was kind of the ethos that I had. I was already an anarchist, like an anarcho-capitalist, before getting kind of deeper into monetary, and that just sort of fit. And then this is actually how I ran into Bitcoin. Somebody from my graduate program sent me the first Wired article on Bitcoin back in 2011, I think it was. But I had no idea that there were like businesses in the space or that you could buy it. And I didn't look to participate. I just said, oh, this is kind of like an alternative currency, and it looks like it could be, a real sound money, and maybe this will replace the dollar one day. But I didn't kind of understand that I could actually participate, and I just sort of followed it from an academic perspective for a while after that.
You then, I guess, went on to become the CEO of CA Vertex. That definitely a company near and dear to my heart. I remember those days. Canada's, I think, first Bitcoin exchange, right, in something like 2013. So when, I guess at the time, most of the world still thought Bitcoin was darknet markets. What was it like running a Bitcoin exchange at that stage? How did you explain what you were doing to people? And yeah, maybe talk about that a little bit.
Um, yeah, CA Vertex, I think, was founded before 2013, but and I came to work there, and then the founders put me into a what's the right word? Like a interim CEO spot that eventually kind of resulted in the sale of the company to Coinsetter. And how did we explain it back then? Well, I guess we had a couple of approaches. So one was we just kind of made ourselves available to people who were already interested in crypto, right? So like Bitcoin Talk existed back then. Andreas Antonopoulos was very popular and evangelizing crypto, right? And the ecosystem was growing already, and then there were people who just, oh, how do I transact kind of safely, uh, in this asset? Because before the exchange existed in Canada, you either had to send your money via like an international wire to Mt. Gox or Bitstamp. Right? That was about it that existed at the time, and the alternative was trading like via Interac e-transfer or something with somebody on the forums, and it was just easy to get scammed. So the I don't know. I feel like the pitch for the exchange was pretty simple. If you want to buy Bitcoin and you're in Canada, then this, the place to buy it back then. Um, but the company actually built a merchant solution that uh, allowed even people in real life to transact in Bitcoin and receive the money in or out of a CA Vertex account, which was, I thought, super innovative at the time. And the app was actually pretty good. Like you could just have it on your phone, and QR code would show up for individual payments, and there was some accounting behind it. And we actually outbound dialed businesses back then. Like we had a small sales team. I actually participated in a bunch of these calls where we just outbounded to business and pitched them on accepting Bitcoin. And the pitch to those businesses was actually a lower cost. Hey, this is going to be cheaper than credit cards, and there's no chargebacks. The transaction's irreversible was kind of the selling point. And like I said, the interface for the tech back then was actually pretty good, and the transaction kind of throughput limit and the fees on the Bitcoin network at the time weren't a problem. I mean, 7 transactions per second was plenty for the network back then.
You guys sold CA Vertex to Coinsetter, which was then sold to Kraken. A chain of events that eventually led you to perhaps one of the most iconic crypto exchanges in history. When you walked into Kraken, what was your honest read of the company at the time?
Yeah, well, I was impressed, I gotta say. So the whole team was really focused on security, which I thought was super important in a crypto exchange at the time because so many of the like businesses in the space had had security problems up until then. I joined Kraken in early 16, and I remember what we used to say. It wasn't even a joke. Like, oh yeah, 20 or 30% of crypto businesses are going to get like hacked or lose their coins in a year. And before I joined Kraken, we would say that, and I feel like that wasn't that far from the truth back then. It's kind of crazy the earlier track record for some of these companies. And so I was impressed with the team. I got to say, especially the security focus, and then uh, the specific team I worked with. I went in and I don't know. I probably was like, oh, I'm going to help these guys out with their processes. We're going to clean things up, make it more efficient, whatever. And I got in there and I was like, these guys actually know what they're doing. Probably learned something here.
And then you went on to spend nearly 8 years at Kraken. I think one of the roles was chief strategy officer, where I had a short stint alongside, and got to see you in action. That's a long time in crypto years. So, I mean, I don't even know if you can talk about this, but like, what's the most important strategic decision that you were a part of, and what did it teach you? Now that you're looking back, maybe go far back so that we're not violating any sort of privacy.
Yeah, yeah, I've thought about this, and I think most of the decisions that we made there were, at least after I was kind of a part of them, were made in like a group, where like anybody would have an idea and then we'd argue about it. And, if one of them got implemented, it's hard to claim ownership. But I'll say ones that, I was a part of one of the team on, and was an advocate for, was staking available on the platform. Kraken calls it earn now, I think, where you can earn yield on your assets on the platform. And this seems obvious now for an exchange to offer this. And of course, virtually every exchange offers it. But back then, it was novel, and not every exchange offered it. And Kraken was very early in passing through staking yields for clients and managing what percentage of assets ought to be staked to facilitate withdrawals and so on, and kind of leveraging its capability as a centralized venue to provide value for its clients, right? Like you can pass on almost all of the staking rewards for the clients while still facilitating uh, full liquidity. Like, any user who wants to withdraw can withdraw, and you can still earn staking rewards, for example. Say that's pretty compelling. Another was stablecoin adoption. So Kraken's become kind of a hub for stablecoin trading, especially earlier on. When Kraken first launched stable to stable pairs and pioneered a different fee structure for stable to stable trading. I think Kraken just crushed it on that, and had something like 60% of the global centralized exchange market share by volume anyway on stablecoin trades, and it's still even now probably or the most liquid or second most liquid stablecoin trading venue. And this is for switching stables. Like if you want to go USDT to USDC, say, then Kraken's one of the best choices in the world to do that even now with the most or the second most liquidity available. Um, and then another that we worked on is Kraken offers to many geographies a margin trading program where I don't know if this is the right word, but Kraken puts up the kind of the loan. And um, I'd say there was a group of us, but this program has been incredibly helpful for Kraken and hopefully for users. And that was in place early on, but the growth of that program requires an enormous amount of capital to kind of make sure everything's backed. It's not just database money, and to keep that safe and to scale it, it took a lot of work.
Joseph, I'm sure you heard about the massive news, right, around Kraken this past week. We don't just spend too much time on it, but just in short, what does it mean to you, to the industry? Is it as
Yeah,
big as people are saying it is?
yeah. So Kraken's got access to a Fed master account now. And it looks like the banks are upset. I saw the block published an article saying three or four industry groups of banks have complained and say this is dangerous. But I think this is great news. But I mean, we've been working, or the team has been working behind the scenes on getting this done since, geez, I feel like it's been since 2018, right? Like, what a long run to, maybe it's a little later than 18, but man, there was so much work put into getting access to that account. So uh, I haven't looked into the details of what it actually entails, but it's the Wyoming SPDI, the Special Purpose Depository Institution, which is kind of a light banking license that Kraken's got at the state level, but it kind of passports across most or all of the states, and it gives Kraken access to the systems that other banks have access to. But the SPDI is a full reserve, uh, account. So uh, Kraken's not able, or at least my understanding anyway, not able to borrow enormous amounts of money with relatively low collateral requirements like the other banks can. So I don't know, it doesn't seem like very risky to me, and not sure why anybody's complaining about it. If my understanding is correct, but it should open up some new features, payment rails, easier user experience, etc. for Kraken, and maybe opens up the creation of a bunch of products for Kraken, especially targeting institutional customers on top of this account.
Hey Joseph, we got maybe 4 or 5 minutes left. Let's talk about you've described DFDV as the micro strategy of Solana. More recently, you kicked this talk off talking about a new project that you're working on. Maybe tell people a little bit about just over the last year, and maybe zoom in on over the last month or so what you've been focused on.
Yeah, sure. Thanks, Sunny. Yeah. So we have a Nasdaq-listed company, DeFi Development Corp. DFDV is the ticker, and it's a Solana treasury company, and its mission is to accumulate as much SOL as possible with a focus on Solana per share growth. And we kind of initiated that business back in April of last year, so coming up on a year now that that's been running. In 2025, it was the best performing digital asset treasury stock, and for a bit, it was the best performing stock in America. Though I'd say DATs are out of favor currently, and many trading below 1x MNAV, which is kind of a key measure for evaluating DATs. Though I think the company is still doing very well. And our other project that we think will significantly support DFDV is Apex, the stablecoin project we mentioned earlier in the show. And so, coming from my vantage point as CEO of a digital asset treasury company, and knowing many of the management team or board members at other DATs, I think there's a wave coming of issuance of variable rate perpetual preferreds by DATs. We see this with MicroStrategy or Strategy leading the charge here with Stretch. STRC is the ticker. Do we have time to talk about these instruments, or Sunny?
Sure.
Or?
Yeah. Go ahead.
Sure. So, as I mentioned, Stretch variable rate perpetual preferred. So preferred stock is a stock that a public company can issue. It's not common stock, and they just assign kind of a financial contract to that stock. So in the case of Stretch, it targets a par value of $100, and then the dividend rate varies to kind of bring it in line. So if Stretch trades below 100, they raise the dividend rate. Dividends are paid monthly. If Stretch trades, the other way, they take the interest rate in the other direction, or the dividend in the other direction. I don't remember which one I started with. So and the purpose of these are they basically become like a loan instrument for these treasury companies, but the loan never has to be paid back. It's perpetual. So MicroStrategy or strategies using Stretch to buy Bitcoin. So stock of Stretch goes above 100, they issue more Stretch, sell it into the market, they take that money, they buy Bitcoin, and the dividend right now is 11.5% annual on Stretch. And Saylor's perspective is, well, Bitcoin's going to go up by 20 or 30% a year, on average for the next 10 years. And as long as we can borrow dollars at a cost of capital lower than the long-term appreciation of Bitcoin, then we're winning. And I think this is pretty compelling. And from the DAT's perspective, they're issuing the preferred. It's not dilutive to common, so the common shareholders are accreting crypto asset per share, and which is kind of the holy grail for a DAT investor. And then we're seeing other digital asset treasury companies issue similar instruments. So Strive, which is another Bitcoin treasury company, has issued one of these prefs named SATA, SATA, and DFDV, our Solana treasury company, has filed with the SEC for a also variable rate perpetual preferred modeled on Stretch and SATA. So, I think we're a little early there, but I expect that, I don't know, maybe 10, 15 more DATs over the next, say, I don't know, 6 to 18 months, issue these variable rate perpetual preferreds. And Apex is a stablecoin product built on top of these assets. So the intention with Apex is to hold a basket of the prefs and pass on the yield from the prefs, the dividend from the prefs, to the stablecoin holders.
Interesting. Yeah, I kind of misread the time. We actually have a couple more minutes. Are you good to go for another 10? Or
Yeah.
do you have a hard stop? Yeah, okay, cool. So Joseph, another question I had was around your thesis around Solana, right? When did that start? Like, I mean, obviously you were early to Bitcoin, you were sold on orange pill like long ago. But when did you start seeing the light with Solana? Like, what's the why behind going all in on Solana?
Yeah. Well, I never sold my Bitcoin, so all in on
Right,
almost all in on Solana.
right.
Yeah, for the DAT, I think the decision was easy for us. So uh, Parker White, who also worked at Kraken with me, and I kind of co-founded with John, the CFO, John Han, at DFDV. We kind of co-founded this a group to do a transaction with a Nasdaq listed company. And when we got together to talk about what we were actually going to do, we said, okay, well, choke point 2 is coming to an end. What's the implications of that? One is public markets are going to open up for crypto, and two, a bunch of assets that people think were securities, 2 years ago aren't going to be securities anymore. And Solana had been named in the complaint against Coinbase by the SEC as one of the example assets that might be a security. So kind of put that together and we said, okay, well, there's probably going to be at the time, MicroStrategy equivalent for Solana. And maybe we should just do that first. And now, why did we actually pick that asset? Well, at the time, Parker had been running Solana validators for probably 2 years. And both of us had been participating in Solana DeFi ecosystem since mid 21. And of course, we'd both participated in Ethereum DeFi earlier on, but if users or viewers have tried both, I mean, the user experience is just a lot better on Solana, right? It's much faster. It feels like a Web 2 experience, but it's actually a Web 3 experience. So uh, for me, it was the user experience and just resulting in personal conviction. And Parker had been, like I said, running the validator for a while, and he's not running Ethereum validators. So really that was it for us. It wasn't. I mean, we were the first non-Bitcoin DAT. We didn't look around and say, oh, gee, what is there not a DAT for yet? That's not what happened. We could have done an Ethereum DAT. We didn't. We did a Solana DAT first.
Yeah. So, and you've also famously said that Solana's volatility is an opportunity rather than a flaw. Most institutional investors hear volatility and run, but make the bull case, like why does volatility actually make Sol a better treasury asset for your model than a more stable asset would be?
Yeah. So the way the treasury companies work, they need to have uh, volume traded in order to raise money. So the best way to raise capital for a DAT is to sell common equity into the market via an ATM or an ELOC structure. And that's the best capital you can raise. It's the friendliest capital. You're selling into the market. The buyer on the other end is probably a retail investor who actually believes in the stock and wants to hold it for the long term. And that capital's permanent. You raise the money and then you can use it to buy Sol or Bitcoin or whatever, hold it forever. You don't have to pay that money back. You sold the equity. And in order to sell equity, you have to have volume traded in the stock. So in other words, there has to be buyers on the other end. One of the ways to get volume traded in the stock is volatility, where you know traders want to speculate on volatile instruments. Nobody wants to trade a stock that just sits at one, and doesn't move, right? So you're not going to get volume without volatility. Saylor famously says, "Volatility is vitality." And I think that's true here. And then there's also something to say about the play around the MNAV for DATs. So MNAV's like a multiple on your net asset value. So DATs are said to be at at 1x NAV or above or below 1x NAV. Basically, if a DAT is trading at above 1x NAV, then it can issue common equity, just sell new stock into the market, and then buy their underlying crypto asset. And when they do that, it's accretive on a crypto asset per share basis. And inverse would be true if they were below 1x NAV, they issue equity, it's dilutive on a crypto asset per share basis. So the volatility can or ought to result in these situations where the company isn't trading at just 1x MNAV. The company ought to be trading at a variety of points, right? So sometimes it trades above 1, sometimes it trades a lot above 1, sometimes it trades below 1, maybe it trades a lot below 1. But both of these are opportunities for the management team of the DAT to make decisions about whether to issue new stock and buy it, or whether to sell the underlying and buy the stock, or maybe just sell off staking rewards and buy the stock. But this kind of process can result in crypto asset per share increases for all the shareholders. So hence, volatility is a good thing. Volatility in the underlying that then is magnified by the DAT taking on some form of leverage, hopefully a very safe form of leverage, is why it's why volatility is actually good for these companies.
And so, I mean, there were, I guess, like a wave of treasury companies coming to market, right? Especially last year for all kind of crypto assets. But you guys were the first movers on Solana. How do you stay ahead of the pack? And how do you actually do you even want competition in this space, or would you rather have it all to yourself?
Yeah. Well, it turns out the barrier to entry to creating a DAT is lower than I thought it would be. When I got into this, I wasn't familiar with or wasn't as familiar, I'd say, with public markets. So I was more of a crypto guy first. Now I might be a bit of both. But barrier to entry is not high. There's over 200 DATs now. It's not hard to kind of pick up a public company or take one out via SPAC or whatever, and turn a public company into a DAT. So there is a lot of competition, and these companies, all of the companies are like looking for ways to differentiate from each other. But the narrative for DATs is just not great now, right? Like almost all of them are trading, around 1x NAV, maybe below, maybe a little above. And we're seeing now many of the DATs like fleeing being a DAT. Oh, I'm not a DAT anymore. I'm a real world asset, whatever company now. Or, I removed MNAV from my website. We're not a DAT anymore, right? So I think we're going to see more and more of that. So there's going to be less DATs in the space. The ones that survive or hang around, stay in, I think will go the path of issuing the variable rate perpetual preferreds, and that's going to be like the next evolution of these companies, which I think is going to be good for shareholders and good for crypto markets. And you asked about whether these companies want competition or want to be the only one. Yeah, of course, it'd be better to be the only company doing this in the space. I don't think it would even have to be on a per asset basis, but if you look at Strategy's performance prior to other DATs entering, they traded at a bigger premium. And now more recently, they've been able to raise even more capital and buy even more Bitcoin after the competitions come into existence. But the big growth in crypto asset per share, I think primarily happened when there was less competition in the market.
So 10 years from now, what does the financial system look like if your vision plays out? And what's the role of DeFi Development Corp and Apex in getting us there?
10 years is a long time, Sonny.
5 years.
No, I want to do the 10.
Let's go with 10.
I want to go with 10 because I got some.
Because we've known each other for more than 10, right? So I mean,
That's
it'll
right.
go by in a heartbeat.
So Yeah, that's right. So in 10 years, I think the the narrative around variable rate perpetual preferreds has played out, and these instruments are massive, and the rates have come down. I mean, we're talking hundreds of billions or trillions of dollars in variable rate perpetual preferreds backing digital asset treasury companies, and this is going to become, like Saylor says, Bitcoin is digital capital, and uh, Stretch is digital credit. And I think these digital credit instruments will, they're going to take on, say, fixed income markets. I mean, this is an incredible TAM. I mean, the total addressable market for this stuff is just massive. And as these instruments grow, they get more liquid, they become more trusted, the volatility decreases. I think we see just a massive adoption of them, and the the interest rates come, or the dividends come down on them in the longer term, and they become kind of a primary method or approach for users who want yield on dollars. They could become as prevalent as money markets or corporate or potentially even government bonds over a long enough time period. This is Bitcoin-backed credit ultimately, and it shouldn't be surprising if there's trillions of dollars of it, a decade from now.
I like that. Okay, I gotta ask one more question, and then we can land the plane after this one. Is it true that you guys acquired Solana from the Alameda bankruptcy estate?
Yeah, but this is not very hard, so it's not super special. So after the bankruptcy for Alameda, which was part of the FTX stuff, the SOL that Alameda held was sold off, and it was set into like a vesting contract, basically. So BitGo custodies all of it. Galaxy built a fund structure on top of it to tranche it out and sell it with their, or not really tranche it out, but to sell it out via their OTC desk and make it easy to trade. Um, and you can just go trade the discounted locked SOL with Galaxy or with the BitGo OTC desk. And the it's vesting until January of 2028. With I'd have to go look at the details now, but it's there's less and less of it every month, right? It unlocks monthly, and DFDV bought a lot of it back early on when when we first came out, but it's been about a year now, so quite a lot of that has like vested out and become liquid SOL now.
Hey, Joseph, if you were talking to the guy that I met 10, 12 years ago, what's like one piece of advice you'd give him, or I don't know, what would you share with him?
Hold your Bitcoin.
Hold your Bitcoin. Yes, great. Fun. We'll end on that note. Thank you, Joseph, for spending time. And you're super busy. We have 23 people watching. Thank you all for tuning in. And yeah, we'll bring this one to a close. Until next time. Bye bye, everyone.